guys, it's Workin bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar, just the one-day chart on Coinbase. And happy Memorial Day weekend, guys, for those of you that are in the States. We want to send out a shout out to all of our military members, guys. Thank you for your service. Thank you for what you do for us every day to keep us safe, guys. We cannot thank you enough. We honor you today. I know Memorial Day is tomorrow, guys, and you'll certainly be in our thoughts and our prayers. So thank you very much for what you do. All right, we're looking at the daily candle, or excuse me, looking at the daily chart on Coinbase. As I said, Bitcoin last time we spoke was operating within this symmetrical triangle by symmetrical wedge. We could have broke up, could have broke down, as we discussed. The nod was in favor of the bulls, and sure enough, the bulls pulled it off here. We have now cleared above 84.50. I do think very likely, guys, that well, first of all, I'd like to see a decisive break above 84.50. In other words, a daily candle opening and closing above 84.50 to solidify this breakout. But even if it does not, even if we were to correct from its current price point, I do think that this very likely solidifies the bull market. I do think taking out this prior high from July of 18 was the last high that we had to take out. In fact, if I go over here to the monthly, as I've showed you guys numerous times, that was the last swing high before we ushered in that low of 31.50, guys. And we've now taken that out to the upside, guys. So even if we do correct here in the short term, guys, I do think that it would be, even if we have that 35 to 45% correction in the short term, guys, I still believe that the bottom is very likely in, and that now that we've had this new high and we've taken out the prior high, I do believe that the bull market is now officially in. Now, zooming in, looking at our daily, obviously, price created a higher high. If we look at the RSI, daily RSI has created a lower high, I should say. Looking at the MACD, histogram on the MACD on the daily obviously created a lower high as well. What does that mean? That's obviously bearish divergence, guys, and that would suggest a larger breakdown to come. Now, does it have to happen here? No, it doesn't. But I do believe where we are right now, it's obviously very likely it's going to happen. It could happen where it is. We could get another kick up. I've told you guys before that if we get a decisive break above 84.50, that very likely we could break up between about 95 and 99.50. Our target area up in here, that was the last, the next area of swing high. That was the next area where we created resistance back in here of May of 18. So I do believe there's a good chance that we do it if we get a daily candle opening and closing above 84.50. Whoop. Sorry about that. Closing above 84.50, I do believe that becomes very likely. That being said, if I pull out my fib extension here and I go from the swing low of this prior order structure here to the prior swing high, back to the prior swing low, what are we seeing here? We're seeing that we're hitting right almost perfectly at the 618, maybe just inside the 618, guys, hitting inside the golden pocket here, guys. So, this is a decent area of resistance. That is where we're finding resistance now. Could that be the area that we get rejected strongly? Could be, possibly. But more importantly, I think a break above this zone would be your signal that we're going to continue up to the upside, guys, and very likely continue up to around $95 to $9,600 area at least. The top of this zone here, the top of this golden pocket, remember the golden pocket is between the 618 and the 65 fib level. So the top of that area is going to be about 88.90. So if we can break above 88.90, again, I think that's going to be a very good signal that we are going to continue to the upside, possibly that $95 to $9,600 range. Now, zooming in here on the hourly, yes, this was bullish that we broke up here. I mean, obviously, there's no question about it. But looking at the volume, yes, we had a nice little increase in volume here. Again, no question about it here, guys. But it's not that significant volume that I would like to see on a major breakout, guys. Not yet, anyway. Doesn't mean it can't come, but we're not quite seeing it yet, anyway. In fact, if I just look back here at the sell volume that we had back on May the 17th, or excuse me, May the 17th, the sell volume on the hourly was much, much higher than anything that we're seeing right now here. So I'd like to see volume come in here a little bit more. Currently, looking at daily volume, we are sitting at 24.6 billion. That's decent. That's not bad, guys, but remember, we were at about 33 to 34 billion. I'd like to see volume really get up into that range to confirm a nice little decisive breakout. Until then, guys, I'm a little bit skeptical that we may get a pretty hard rejection here. We'll have to wait and see how this plays out. Now, one of the major things I want to see if we do end up getting a decent retracement here, guys, is if we look at this little order block here between about or this little zone here between about 81.50 and 84.50. That was the major area of resistance throughout this order structure here, guys. That's what I need to see start acting as support. If you're looking to trade this range, guys, I'd step my stop loss right below this prior candle here, which would be at about 78, let's call it 78.50. That's where I'd set my stop loss at. I'd be a buyer anywhere between about 3 8,300 and 8,150, guys. That's where I'd be looking to buy in between 8,300 and 8,150 if I am bullish on this, and that's the zone that needs to start acting as support. If this does start acting as support, if we dip down here and we get a strong bounce off that zone, guys, again, I start to become extreme. I start to believe that this thing can continue to the upside. Until then, guys, it seems to have fizzled out a little bit. We'll have to wait and see kind of how it plays out. Another reason I'm extremely bullish on here, guys, on this breakout was two reasons. Well, a couple reasons, guys. I discussed the first one. We broke above major area of resistance, but not only did we break above a major area of resistance, every single time that we've broken out here in the past, looking at the past couple months, it's been when shorts have been stacked, and we wanted to liquidate those short positions, guys. So shorts have been stacked and longs have been falling off the board. That's not what we had here. Shorts have basically been stagnant since May the 15th. If we look at longs, prior to this move, longs have, for the most part, been pretty dead, or falling off the board at the very least to pretty dead. So again, this was not a breakout to liquidate shorts, guys, at all, by any stretch of the imagination here, guys. This is very bullish. We did not break out to liquidate shorts here, guys. This was just a good old-fashioned breakout. Now, you could call that manipulation. You could start getting into reverse psychology. Are they thinking this to think that? And yeah, anything is a possibility in Bitcoin, guys, but you'll drive yourself crazy doing that. The bottom line is, guys, this was a very, very bullish breakout. Probably, even if we see a larger, that 35 to 45% retracement that I do believe we're due for, that we're either going to see it now or at 95 to 9,600, that is going to come. But even if we were to see that, guys, this solidifies in my opinion, the bottom being in. This solidifies my theory that the bull market has begun. I do believe now that the bull market has begun, and I do think the last nail in the bear's coffin will be when we have a daily candle both opening and closing above 84.50. Looking at the daily chart, guys, the daily chart, again, nothing but bullish. We've got the 8-day above the 8-day EMA above the 21, above the 55, again, all bullish, and those continue to get more and more distance between the two. And think of this as kind of a padding. That you want to see this bullish setup. You want to see the lower time frames above the higher time frames. So we've got the 8-day EMA above the 21, above the 55, and once you've got that, you want to see them spread out. And we're continuing to see them spread out. And the more they are spread out, guys, you can think of this as almost a cushion. So as price comes down, if we get a large retracement, this is more of a cushion and more of a padding to provide support. And we saw that back here when price came back down here, hit the 21-day EMA, and just boom, right back up here. Very, very strong bounce off that 21-day EMA. So the more spread out these moving averages are, exponential moving averages are, the more the padding is, and the more we can say they're very likely, even if we get a strong retracement, the more confident we can be about a nice little bounce, even once we get that nice 35 to 45% correction that, eventually I do believe is coming. Coming out to the weekly chart, guys, again, extremely bullish. If we can get the weekly candle closing at its current price point, again, just extremely, extremely bullish. There's no other way to look at this. We've got the 8-week EMA above the 55-week EMA, and we now just had the 21-week EMA crossing above the 50-week moving average here. What I'm watching even closer is the 55-week EMA and the 21-week EMA. They're on a path to converge, and if we can get the bullish setup to where we've got the 21-week EMA crossing above the 55-week EMA, which is above the 8-week EMA, if we can get that bullish setup where we've got the 8-week above the 21-week above the 55, that is, so in other words, if we can get this 21-week crossing above the 55-week EMA, again, guys, that is a very, very bullish sign if that does happen. We'll have to wait and see how it plays out. But as of right now, guys, it does look like a strong possibility, and we'll have to wait and see, as I said, how this ends up playing out. So how would I play this, guys? How would I play this? Again, I'm looking for a close above 84.50 on the daily. I'm a buyer, anything between about 83.50 down to 81.50. I'm looking for a bounce, so small buys in that area, guys, but we have yet to test this support. So I'm buying it on the first test is very risky. You could also say, though, guys, the more risk, the more reward, and that certainly is true if we get a strong bounce off this zone, guys. So just be very, very careful coming down here, guys. I would have a very tight stop loss, as I said before, at about 78.50-ish, knowing that if we do end up breaking down below this zone, if we take out this prior low here, which sits at about 7,500, if we do take out 7,500, guys, I do think there's very likely we're coming back down to test 65 to 6,700-ish. That being said, guys, we'll have to wait and see how this ends up playing out. To the upside here, I'd wait for that break above. If you want to be more conservative, I'd wait for that break above, as I said before, about 88.50-ish, 88.80, I think it was. We break above 88.50, guys, I think it's going to continue to the upside to that $9,500 to $9,600 range, and we'll have to wait and see how it plays out. Either way, I am still looking for that larger 35 to 45% correction here, guys. I do think there's a very good possibility that does come. Anytime we've had parabolic moves like this, we've always been followed by that 35 to 45% correction, and I don't think this is going to be any exception. That being said, we could see more upside, guys, and we'll have to wait and see kind of how this ends up playing out. If we do, again, we're looking at that target between 96 to 9,900, really 95 to 99.50. And so we'll have to wait and see how it plays out, guys. In the short term, we need to see 84 to 84.50 start acting as a very strong base. If that does, again, a very, very bullish sign. So we'll have to wait and see kind of how that ends up playing out, guys. So I'm going to go ahead and confirm. I'm going to go ahead and close things there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe. Take care of yourselves. This is Workin. Signing out.